Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you this week. Mike Novogratz, founder and CEO of Galaxy, joins us, his fourth appearance on the show. But it's a big week this week in New York for Galaxy. Galaxy starts trading on the Nasdaq exchange in the United States under the ticker GLXY. We'll talk with Mike about that, what it means, what kind of milestone it is for the company and him. We'll also, though, get into it with Mike about tariffs and the economy and macro. We'll talk to him about the interesting intersections between crypto and AI and data centers. And, of course, we'll check with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thank you for having me.
It's great big week in New York for
Absolutely.
Galaxy. I've already talked about this on the intro, but Galaxy is planning to list on the Nasdaq on Friday. That has everybody here very excited, but we're not going to talk about that. Let's talk about markets. Bitcoin holding up in the over 100K now for almost a week. Equities still chugging along positive. China, some headlines about, a little bit of thawing in the U.S.-China angry trade war. I saw something like China's lifting export restrictions on some American stuff, and, they're meeting. CPI came in soft.
Correct.
Tell us how the vibes are in markets.
The vibes are generally very good because stocks are ripping higher, and they have rallied almost 25% from the lows, and you are talking about an S&P that's essentially unchanged on the year, even though we've overturned decades of trade policy and have taken a very tumultuous path. So vibes are generally pretty good, particularly amongst the retail crowd that participated heavily in the dip buying.
They bought the dip.
They bought the dip and are now sitting in a ton of profits. The institutional community, however, is a little bit more, let's just say, less happy about
cautious.
This situation.
So they missed some of the dip, probably.
They missed a ton of the dip. And, in terms of the positioning data we've seen amongst the institutional crowd, positioning was a 2 out of 10.
So they mid-curved it, at least for now. I mean, we don't know where this goes in the future, but the sort of the left curve looked like the right play.
The left curve was absolutely the right play.
You've been talking about this for years now on the show, but about how retail has been conditioned to buy these dips since the great financial crisis, and they've been rewarded for doing so.
Every dip since the GFC has been
because we've continued to make all-time highs.
Correct. And so really, what it comes down to stop the momentum that stocks have, you really need a recession, right? And if you don't get it, then just the passive buying flows alone kind of just drag you higher. Stock buybacks are now back in full force, right? I think AMD today or yesterday announced a $6 billion share buyback program. Essentially all of the Mag 7 has buyback programs, I believe. And so, the drift in stocks is back to just being a grind higher.
Yeah, we're only about 4% off the S&P's all-time high.
Yeah, which is nuts.
I mean, do you think we're going to see all-time highs?
It's possible.
There's got to be some resistance there,
I will tell you
right?
that we have crossed the threshold of fair value, right? If you assume the S&P needs to trade on roughly a 19 PE.
Yeah.
Right, and you assume a healthy amount of EPS growth, call it 5-6% EPS growth, and you slap a reasonable multiple, that takes you to right around 5,900, and we're trading closer to 5,950.
Yeah.
But the positioning metrics are still suggesting that there's tons of room to add.
Because I was going to say, if retail has been buying stocks, but institutions, just as a categorization, haven't, or presumably you get back above all-time high, like they're going to want to pile in, or at some point.
It's possible. It does feel like
The dominoes do start to fall. Maybe they
Correct.
don't all, but like,
Correct.
then a couple do, and it goes higher, and now you're in a pain trade by not being long, or as long as you should be.
Correct. And, what you've seen in the market is animal spirits, essentially.
Yeah.
A lot of the popular retail names have surged back to highs. Names like Palantir and Tesla, right? Those stocks have tremendously outperformed. And it's just hard to look at those things go up and not want to participate.
Yeah,
so
not
there's a little bit,
at least on the S&P.
yeah,
right?
correct. And so, you've got a dynamic where positioning can take us higher, but I do think the fundamentals, like you are
We're stretched.
yes.
Yeah.
And you're overbought on like 10 technical indicators almost.
Yep.
I think S&P RSI is right around 70, which is your overbought territory, and we've essentially just gone up in a straight line for 3 weeks.
Yeah,
and so
we have.
it feels a little scary up here.
One thing that's interesting is seeing Bitcoin, which sort of moved kind of not ahead of the 3 weeks, but over the last week or so, sort of moved first. Then when stocks were performing really well on Monday of this week, Bitcoin and ETH were selling off a little bit.
Yeah.
And then on Tuesday, Bitcoin and Ether were trading really well, and stocks were kind of selling off a little bit. And now they're both stocks are up slightly today, doing fine, and Bitcoin's kind of flat. Like, has there been a relationship? Is Bitcoin a leading indicator at all, or is it just are they all beta again on risk? Because gold is down relatively
A lot. There's everybody's in risk on.
So now now Bitcoin was doing decent on the gold trade for a little bit when it was trading like gold, and then now it's doing well on the risk trade.
No, I still think fundamentally it's a risk asset.
Yeah.
And I think when retail feels good, they pile into Bitcoin.
Yeah.
And you've seen, you had a healthy amount of ETF inflows
a
like
lot.
a
We're
week and a half ago.
cumulatively
Yeah.
cumulative net flows are at all-time highs. So
Correct. And the corporates that buy Bitcoin, like their
They've been buying.
multiples are staying pretty constant. And
new ones keep being announced.
correct. And the Cantor one, like just announced a $500 million purchase of BTC.
Right.
And MicroStrategy in their last earnings re-upped their ATM facility by $21 billion.
Yeah. Wow.
And so
Wait, so that was their 21-21 plan, and did they already do it? And now they're doing another one?
Correct. So they finished at the money offering.
But it was going to be over 3 years initially.
Correct.
Well, he's buying at a record pace.
Buying at a record pace, and I don't see it slowing down at all.
Yeah.
Because it seems like what's happened basically is that the floor on the stock market has gone up because of the trade relief.
Yep.
Right. And so if stocks are going to stay healthy and the market's going to stay healthy, then I think this, corporate strategy can continue for a little while longer. But the other thing that kind of sticks out to me in the market right now, though, is with this rebound in risk, you've obviously had a repricing of the rate complex. And so you've gone from about 100 basis points of cuts priced into the December meeting, kind of at the depths of the equity correction to, call it like right around like 55 bips. So
Wow.
2 cuts, right? So you've halved the amount of, pricing that you've had for this year. And now you're starting to see a little bit of a spillover into the back end of the curve. And right now, 30-year yields are approaching 5%. You are at 4.96 right now.
And the 10 years at
Around
4.5.
Yeah.
Yeah.
And so, back end bonds have started to sell off. That might be a little bit concerning because, again, that's financial conditions tightening, right?
Yeah.
That's mortgage rates going up. That's financing costs going up for companies. That's, debt roll costs going up. And so, there is a meaningful impact to interest rates moving higher.
Right.
And so we'll see if that kind of balances out the risk on theme right now. But I do think that 5% threshold will, grab a lot of headlines, and we'll see how the kind of market reacts to it.
Yeah, well, and building on that, but also back on the equities and crypto side, let's pour some cold water. What is the bear case in your mind? Maybe it is rates higher as part of a tightening of conditions. I mean, rates higher is its whole other story. Maybe we'll talk about that next week a little bit. But about they're trying to get those rates down and it ain't working yet. But what is the bear case for the rest of the year on equities and Bitcoin?
Correct. So if you assume that the baseline tariff rates are, if you just take the Britain and the China stuff, it's like 10% minimum and like 30% on the high end, plus the tariffs on steel and aluminum, like that effectively raises the U.S. tariff rate, by 15%, right? And so that is effectively, a tax hike on consumption.
Call like 15% average inflation.
Yes. So that basically by that 15%, we mean that the average tariff
across
rate
all of the tariffs
is going to go up by
by obviously it's good specific, it's country specific, but in general, let's say it adds 15% of cost for consumers and manufacturers in the U.S. Yeah,
and so
that's a lot.
Effectively, like I don't know if this is factual or not, but I saw it on TV. I think Paul Tudor Jones cited the statistic, but it's effectively the largest tax increase since the 60s.
Yeah.
Right, and that does need to filter into the economy,
to be absorbed,
and that should put a drag on growth.
Right.
And so that's kind of your bear case, and then that's like your base bear case.
I was going to say, then you've got like the student loans and
11 million student loan borrowers as of last week were officially in default.
So now they've got to pay or they get in trouble.
The Department of Education is now collecting. So they can't
buy as many other things in the economy.
Correct. So I mean, that's that's depending on who you are, it's a couple $100 that you are now not spending on consumption.
Yep.
And that's a drag. That also impacts credit scores and the availability of housing to those people. And so there is kind of a knock-on effect. And then we've also seen cracks in the labor market. I think Microsoft today or yesterday announced
they said 3% across the board, right?
3% across the board.
Yep.
And so if you see, trade flow going down, that's going to impact things like truck drivers. We've spoken about AI as well as folks, and enterprises get more in tune with, the benefits of AI. That should lead to a smaller workforce.
Mm-hmm.
And so, there are things that are concerning. But again, like with stock markets this high, there is a wealth effect to also think about. And again, my favorite stat is, the top 10% of income earners who tend to own assets as well comprise 50% of consumption.
Right.
And so, when those people start to feel good, like the economy holds up okay.
Right.
And so, but the other kind of, elephant in the room is these trade deals aren't like signed and done.
That's right.
Right. And Trump and the administration can change their mind.
Or it could, or they could just fall apart. I mean,
correct.
These are tricky negotiations,
and they normally take years, and there's a lot of national security concerns and things of that nature. And so you are kind of relying on trade policy not extending too much further than what people are currently expecting, which is that 10 to 30%.
And that may not be good to rely on. We don't know, right?
Correct.
They're not inked, and it's kind of it's kind of vibes capital management
little
bit, right? The vibes seem good.
The
headlines
fantastic.
are good, but if you think more deeply about the trade headlines, if you think more deeply about them, to your point, they're not inked. They're still sort of like you said this a couple of weeks ago, but like they're sort of ping-ponging on headlines.
Yeah.
Right now, the vibes of the headlines are mostly good on trade, but that could change. Yeah.
And then the other thing we touched on it's the rate stuff, right? Like, if the Fed's not going to be cutting because activity is just fine, right?
Yeah, they don't have to cut.
They don't have to cut, and that is going to put a drag on things as well. But right here, right now, there's still a ton of length that could be added to equities, and people generally on the institutional front and the foreign holders front are underweight relative to where they could be.
They've been doing the European defense stock trade and these other trades because they thought it was going to be doomsday.
Yeah.
But now it's not.
But I do think that the structural move away from owning U.S. assets is really in the early innings.
Yeah.
Right? There are a ton of, real money, like real dollar asset reserve managers that have a ton of rebalancing to do.
Right.
And that happens over time. But, I would think that at some point by the start of next year that the dollar will have sold off a lot more.
Interesting.
Yeah, and that's the color we're getting from a lot of major FX desks.
Yeah.
Which is like, yeah, people are still
There's still
far offsides.
There's more shoes to drop.
Correct, and that's just you just think about it. There's a lot of shoes to drop just to get to market weight. Like if you're overexposed and you need to get back to kind of market weight in U.S. assets and U.S. dollar in U.S. dollars, basically, like just to get back to neutral, like there's a ton of dollar selling that has to happen.
Interesting. All right, my friend Beimnet Abebe from Galaxy Trading. Thank you so much.
Pleasure.
Let's go now to our guest, Mike Novogratz, founder and CEO of Galaxy. Mike, welcome back to Galaxy Brains.
My third time?
I know, fourth, I think.
Fourth time?
Fourth time.
Veteran of Galaxy Brains.
Yes, sir. And thank you for this great studio and setup and for paying me a salary, sir. Last time you were on, you were with your friend Dan Moorhead. I thought that was a great conversation. Maybe was that February, guys? Maybe we did that February-ish. Still yet more has changed in markets. We dipped a lot in equity markets and in Bitcoin went down to 74K.
Bitcoin went down and kissed right where it broke out from post, Trump election. And markets often go retest the breakout level. What made it scarier, actually, than a normal retest was Ethereum going way through where that retest level would have been 2,200, 2,400. We went way through all the way to, 1,700,
Yeah,
right?
16, 17.
Ooh, ouch.
It's bounced hard off that area.
It has. But normally markets act in unison when they're retesting a level. And so that started undercutting this, wait a minute, maybe this, how do we miss this? Like, what did we get wrong? And that went through the market, and market got very scared. And so if we were just a Bitcoiner, it was a little bit easier to stomach the downdraft. If you were a crypto dispersed portfolio, it was a very painful quarter. Why did it happen? Listen, we had a euphoric top with the inauguration. Couldn't get better energy, couldn't get better information, and then there's a long time before there's new good input. You had Trump out of nowhere with tariffs. That was on anyone's bingo card, and that created a risk-off. One of the fastest and most violent risk-offs I've seen in equity markets and currency markets and credit markets. Less credit markets, but currency markets. And, it impacted crypto. And so we had the breakdown of gold and Bitcoin, where gold roofed and Bitcoin sold off. And, there were some hairy days in there, though, like in almost every one of these cycles, Bitcoin stops going down, it finds its buyers, and then it starts regaining momentum. And all of a sudden, as soon as it gets momentum, momentum begets momentum.
Yep.
Right? Michael Saylor isn't buying on the way down because he doesn't want to be selling his stock into the hole. As soon as the stock starts bouncing, he's able to sell MicroStrategy and start buying Bitcoin, and that engine starts going again. And what's been fascinating is how fast Bitcoin enthusiasm has come back. We've now launched the SoftBank Tether Cantor version of MicroStrategy. The David Bailey version just got announced. The Japanese version is accelerating.
Their Metaplanet's quite large now. They have, I think, 1.8 billion of
Shocking.
Bitcoin.
Shocking.
It was a tiny little hotel group.
Shocking how, and hats off. I have been skeptical of the Bitcoin treasury. I thought Michael Saylor is a one of one, with his laser eyes, with his passion, and he got it out there first. And so I didn't think these other guys were able to duplicate his strategy. I still don't think long term you're going to have that many places where Bitcoin should trade at a premium to Bitcoin. Michael might pull it off because if you think about what cryptos are, they're communities, right? The value of Bitcoin comes from the Bitcoin community. The value of Ethereum comes from the Ethereum community. Those communities go beyond what an equity market owner is. They become almost religious, passionate, definitional. And Michael, in lots of ways, has that with MicroStrategy people. Even though it's a derivative of Bitcoin, it's got its own personality, its own religion.
Yeah.
With Michael as the Messiah. And it's allowed it to trade at a premium to the underlying Bitcoin far longer than any kind of market wizard would have predicted.
Right.
And it doesn't seem to be slowing down. And that's nothing but good for Bitcoin. Because when you think about what makes Bitcoin or any of these tokens go up, it's pulling people into the tent. And Michael's pulling them into the tent via his on-ramp at a faster pace than anybody in the whole game.
Yeah.
And, you know, that becomes a giant closed-end fund. The premium could shrink and expand, but the Bitcoin's not going anywhere. And so we keep taking Bitcoin off the table, putting it away in diamond hands or steady hands. And, you know, as soon as we get a little bit of mojo, I mean, it feels right now like we take out 107, we're going to be 120, 130. And you're like, how did that happen? We were 75 and now we're 120, 130.
I know. It does feel like we did. You're right. We retested basically the November 6th price, and then we rocketed all the way back up. It's like the market is saying that there was froth on top of that 74K. All that other price from late November, December, January was it froth? The market's asking itself that question.
Well, there was froth, and listen, there were real sellers.
Right.
Like some people that bought it at 40 decided they wanted to sell it at 100.
Right, totally.
Some of the OGs that bought it at under $1 were selling.
So, but it seems like we overcorrected from that froth because now we're back over 100 pretty quickly.
104, 400.
I mean, it's pretty high. So maybe 104 was a good price. You could have sold it in January, and if you were smart, somehow you could buy it at 74 in March. But I mean, more likely, if you've just been holding, it's like the last 3 months didn't happen.
If the last 3 months didn't happen, if you went away on a holiday. I used to always tell one of my best friends who's big Bitcoin bags, calls me every day, but he doesn't trade. I said, dude, do yourself a favor. Take a cruise and come back in 4 months.
Yeah.
Let us suckers suffer the up and down of everyday price, the pain.
Yeah.
I think part of the culture of certainly all of crypto, including Bitcoin, is the suffering, the communal suffering. Again, when you think of the real addition that crypto made to investing is this idea of community-based investing. It's literally, you can call it memic, you can call it, but value is coming from that community. And part of what binds that community is, in fact, the jokes, but it's also the suffering.
It is,
right?
Yeah,
You
it's
ask any Bitcoiner, I mean, they've got 50 minds about how they're getting kicked in the teeth, memes about how they're getting kicked in the teeth, or even more sensitive places.
Yeah. Well, I mean, I think it's, and everyone always likes to ask, like, where are we in the cycle? And that's been a pure market question. But I think another reason that people ask it is because we all remember how volatile and euphoric, but also terribly painful these past cycles have been, right? It's sort of a badge of honor.
Yeah. Listen, I think Bitcoin's becoming a macro asset that is going to be on every desk of every macro trader, macro investor. And that's a great thing. And so, will it go 1-to-1 with gold? No, it's going to have a little bit of different properties. But over time, I think Bitcoin's market cap will surpass gold's. Young people like Bitcoin more than gold, period.
Yeah.
That's just the sole reason. And the rest of crypto, in lots of ways, still needs Bitcoin to go up. It's the signaling event. Brings liquidity into the space. In time, it won't. In time, stable coins will blossom. They'll run on other blockchains, and their adoption will have nothing to do with Bitcoin price. There will be projects like Hyperledger or others, Hyperliquid, that blossom as exchanges, decentralized exchanges. Maybe not just in crypto stuff, but in equities and in other assets, Uniswaps. And the Bitcoin price will be so much less important, but right now it still is very important. It is symbolic. It is for a company like ours, but for the whole space. And so my guess is 5 years from now, it's still it's still the number one asset, but it doesn't, its price direction doesn't drive the price direction of everything else.
Interesting. Let's talk a little bit about...
Then we're a real industry.
Yeah, I mean, with some true diversity. Right now, most of those other assets are just beta on Bitcoin one way or another, right? Let's talk about macro, because the reason for that, you mentioned the Trump tariff. Nobody had that on their bingo card. They knew that he was going to do something with tariffs, but it was the magnitude, right? It was that announcement in the Rose Garden.
Listen,
Where are we now in tariff land in your
There
mind?
were two distinct camps. We'll call it the Navarro camp, using tariffs as a permanent adjustment to try to onshore U.S. jobs. And Trump got excited about that. And let's call it the Scott Bessent camp, using tariffs to pressure our counterparties into better fair trade deals. Not complete free trade, not zero, but fair trade. We'll give you this, you give us that. And it feels like Trump is leaning towards the Bessent camp pretty heavily, certainly with this China announcement. Like, part of that was the market telling him, dude, you have to lean the other direction.
Yeah.
Great intent over here to bring back jobs. Ain't going to happen in a horizon that makes sense. And if you keep up, you're going to collapse the global economy. And so the pivot on China was rational, but it was absolutely essential for both sides. And so now it feels like we're going to get a series of trade deals with higher tariffs than we had. There'll be some revenue that comes in to the Treasury, but not as much as they had hoped. And we're going to get a tax package being hashed out as we go. We're already getting a lot of regulatory regime, and the Trump administration will see with that trifecta, can they grow the economy and bring down the deficit? I am skeptical that this year's deficit will be even smaller than last year's 6% deficit. I think we're going to go 7-8% this year. That's why Bitcoin's one of the reasons why Bitcoin's going higher.
Yeah, you've said that it's a report card on fiscal prudence.
But we'll see. Listen, I pray for Scott Bessent's success.
Yeah.
I really do. I think even if it slows Bitcoin price action down a little bit, I think getting our debt to GDP heading in the right direction, which is lower than it is today, is a really important thing.
This is one of those things I think about with the stablecoin bill. I know you've talked a bunch about this and been working with phones over the last few weeks, as you said today on the earnings call, that tariffs and this type of fair trade mercantilism, they impede the dollar's dominance. They make it more costly for foreign countries to use the dollar. Shouldn't the stablecoin legislation be thought of more as a dollar upgrade, dollar dominance bill than a true crypto bill?
Listen, it's easy when you feel like, oh, there's an easy fix having a weaker dollar. We'll be able to export more, but you're like, but your imports cost more. You're less rich. Your standard of living vis-a-vis everyone else's goes down. Why have we had the strongest currency? Traditionally, the country with the strongest navy, the country that protects the world, protects the sea lanes, protects trade, has the right regulatory and legal framework, is the reserve currency. Being the reserve currency costs you something, right? We spend more on the military than anyone else, but it gives you a huge benefit of being able to borrow almost unlimited. And we started to put that brand at risk. And, Trump has a very distinct style, and if you take him literally, you really get upset, right? And a lot of the world got upset. That rhetoric, that's his negotiating style, but it was and continues to be taken very badly. And so we've seen a sell-off of the dollar. I think we're going to continue to see a sell-off of the dollar. We're seeing people wanting to hold less treasuries, and that's problematic for the U.S. There's Secretary Bessent is trying to reel that in a little bit and get us on good footing. But that'll be the real tension. Bad dollar, good Bitcoin.
Yep, I know.
And good crypto. And so I do think Bitcoin specifically, is a almost essential hedge to any portfolio right now.
Yeah, I saw that the UBS, the head of wealth management in Asia for UBS, was saying that their wealthy clients in Asia are turning to gold and crypto increasingly as an alternative in this geopolitical, shuffling that's happening.
If you literally had like a pin, like a little red pin on our blue wall, for every conversation you've had recently about, oh, Norway, the Norway Sovereign Wealth Fund owns $600 million of MicroStrategy, PIN. UBS Wealth Management,
Right.
PIN.
Right.
You know,
Abu Dhabi
Abu
Sovereign
Dhabi
Wealth
Sovereign Wealth
Fund.
Fund, PIN. Like the adoption process is accelerating far faster than I would have ever predicted 2 years ago even.
Interesting.
And I just think we've already crossed the Rubicon. And so now, you know, if Bitcoin's 300 million people on it, it'll be 600 million people in 4 years. It'll be 1.2 billion people in 7 years. It'll be, you know, half the world in 15 years. And that's where you can, you know, people come up with these fantastical prices. It's going to be at $1 million. It's going to be. That's where you can actually get to these prices. Where
Yeah.
you can say, well, gold is now 22 trillion. Bitcoin is roughly
1.5 trillion, 2
2
trillion?
2 trillion, right? 21 million coins, 100,000,
that's right.
2.1 trillion. And so 10x from here, or $1 million of Bitcoin, is gold.
Yeah.
Gold used to be 5x from here.
That's
but
right.
gold went from 1,600 to 3,200.
Who's buying that gold? Is that central banks, foreign central banks?
Central banks, Indian brides. Listen, the Indian dowry system is still
totally,
the
yeah.
biggest buyer of gold. But this is mostly central bank driven. And it's high net worth people driven.
Yeah. Are they diversifying away from the dollar? or-
100%.
Yeah.
100%.
Is this part of the reason why treasuries are the yields remain
And here's
so high?
here's my prediction. This is just on insight, a rumor, but it makes sense. The BRICS are going to launch their own currency. They're going to launch a stablecoin, which is partly backed by gold,
Yeah, makes sense.
to give it a little more juice.
You can't really like settle with gold, physical gold. You can't do trade with it, but you could with the stable coin tied to gold.
And it's not going to be one-to-one back, but I think they're going to throw it into the mix.
Yeah.
It's just a guess. I heard that. It made so much sense. Often when you hear things that make sense, you're like, aha.
I mean, if it
We'll
makes sense to you, someone else, the people who should be doing it must be looking at it.
So back to your case.
Yeah.
Yes, it's essential the U.S. gets regulatory framework that allows Visa and MasterCard and Galaxy and Meta even to launch stable coins and to participate in that world. I would rather have the whole world's commerce being done in dollars than in renminbi or BRICS coins or Bitcoin even for that matter if I'm the Secretary of Treasury.
Yeah.
And so I think both Democrats and Republicans get that. Again, I spent more time on the phone with senators in the last 2 weeks than I have in my entire life.
Right.
Just try and you know, we don't really have a horse in the race on which of the two bills.
Right. We're
are
not
best.
a stablecoin issuer in the U.S. today, right? It's not like
But I have a big horse in the race that crypto takes the next step in implementation and innovation. I want to be able to go to McDonald's, which every time I eat there, I'm like, oh, why'd I do that? But I still, once in a while, I stop and I get a fry and a chicken nugget and cheeseburger. And I want to be able to take my phone, which shouldn't be ringing, and just take my stable coin and pay for my hamburger.
Right.
And that'll happen once we regulate stable coins because Stripe and PayPal and all the payment rail people will integrate them right into their systems.
It's just faster and better than other ways of paying with dollars, right?
And so I think that's coming. It doesn't, right now, legislation probably feels like a 25% chance, which is so frustrating because 2 weeks ago, it was probably 90% chance, and it just got scuttled.
Yeah, I know it's tough. And I think part of it is they view it as a crypto bill, but I view it as a dollar bill. Like it's about American dollar distribution.
Listen, the far left, again, hijacked the process a little bit, mostly because of what was perceived to be cheeky play by the Trump family between the two sons in their crypto businesses and Donald's meme coin, which then was being used for access to dinners. And when you put it all together, it's a good political story for the anti-Trump crowd to say, wait a minute, this is corrupt. And so it dirties up what should be a completely bipartisan issue, especially stablecoins.
Right.
But the whole crypto should be bipartisan, and it should be a technology, not a political statement. But where we are is where we are.
That's why they call it politics. Mike, let me transition. Galaxy had, you guys presented Q1 earnings today. We're recording on Tuesday, May 13th. I think the one thing I wanted to ask you about from this was a new accounting sort of organization now into digital assets, so a sort of shuffling of how we organize the way we think about our business into digital assets and data centers and then corporate and treasury. But we were in global markets, asset management, and digital infrastructure solutions. Yeah. But now it sounds like digital assets and data centers. Listen, talk to us about that.
I had a family office, and this is 2016, and I hired Chris Ferraro. Why? Because he had a skill set that I didn't have, and I thought he was wickedly smart. And when we decided to launch Galaxy as a public company in Canada, the idea was, okay, we're going to be this crypto company. But the other byline of the idea was, we're going to hire the best and the brightest. I used to say, well, I want to be the Goldman Sachs of crypto. The reference wasn't to the businesses Goldman did. When you worked at Goldman Sachs, you felt like you were on the New York Yankees. They hired the best and the brightest. That was at least the culture, the belief system. I'm sure Morgan Stanley had their own, their own, counter to that in other firms. But that's what I was talking about. And what smart people are able to do, what curious people are able to do, what hardworking people are able to do is pivot, is to see opportunities and seize them. And so we had a Bitcoin mine, and we said, well, how are we going to be in AI? And I would get on ChatGPT and try to figure out what to do, and I'm not great. But by pushing and asking questions, it became really evident that we should rip out our Bitcoin miners and become an AI data center. We were fortunate enough, prescient, fortunate, lucky, you put the word down, to actually own a data center in a great part of Texas that has the potential to be the country's largest data center. And so we have gone all in. It is a awesome business. We've got a great team, both looking at taking advantage of the existing power that we have, waiting in the queue for a whole bunch more power, and then looking at business development. We said today we've looked at 40 different sites where we could actually continue to grow. And so, it's turning a trade into a business. And while they're not direct synergies between running a data center and crypto, there are a lot of synergies in the right direction, right? AI and crypto will kiss. It has to, right? AI is the great organizer and centralizer, and crypto can decentralize. And so when you think of things like deep fakes and authentication and even moving money from AI agents, they're going to happen on crypto rails. Like the digital economy, we believe will be built on blockchains. And AI is going to run that economy at one point. And so just being in the data center business puts us around the clients that are building the stuff. And so while we have a few venture investments now that have an AI backbone, I think in the future we're going to continue to try to be commercial and opportunistic. And this is my favorite example of it because it's now going to be a business that is as big as our crypto business. There'll be other things that are also cool that might not be as big, but I think that's the idea. I can phrase it another way. I think if Galaxy has the same footprint in our crypto business today, in 4 years' time, we'll have a pretty crappy business. Like this business is going to change so fast that our team needs to be one step ahead of the game, needs to be seeing where the puck is going, and then trying to build towards that.
Yeah, very smart. It's two just enormous trends, AI and blockchains and crypto. I don't know, but the other thing I was going to ask too about how you think about this company going forward. You were asked by an equity analyst on the call, but there is no company that has the scale of data center business and this very investment and markets related business, digital markets, but together. I mean, I've never heard of a company. This is a one-of-a-kind company at this point, right?
So you could think of us as a holding company with two big businesses. One day I'd like to be a holding company with four big businesses,
right,
maybe. I don't know. Like, who knows? I do know both are growth businesses. Both are going to take capital. and time and mostly human ingenuity. Actually, the crypto business is actually going to be, in some ways, more exciting and harder to run because the roadmap isn't as clear, right? For any of us, not just for Galaxy, but for the whole space.
Yeah.
Right? The regulatory framework, what's going to be adopted, where value will accrete on blockchains. They're all best guesses.
Yeah.
The data center business is pretty straightforward. We know there's almost an infinite demand of power right now. You're up against maybe technology changes fast enough that they don't need as much power to run these things. That's always a risk. But it's, can you get the site? Can you get access to electricity and the regulatory framework there? Can you get it financed and built? And can you get it leased up to world-class clients that are going to pay you?
Yeah.
And so that checklist, in some ways, is much more straightforward than, okay, which blockchain of the 38 big ones, are they all going to be used? What's the security protocol?
Yeah. Even if they are used, the value, should we own the token or should we run the infrastructure for it?
Right.
Where does the value go? You said this really well, I think, earlier today, too, in describing this exact point. It's sort of like the range of outcomes, both positive and negative, is much narrower for the data center, the number of possible outcomes.
Yes.
Whereas crypto is like, if you think about 2021, it's like, well, is there going to be an explosion forever of digital art? Is there going to be, or is every game going to be using it? Is every equity security going to be on it?
Listen,
a lot of these are still in play, so it's the big.
They're all still in play. We're early on all of it. Crypto has not yet, outside of Bitcoin and stablecoins, had its third best use case.
Yeah,
and
that's right.
It will. Will it be tokenization of equities and funds and currencies? I think so. But I'm not sure. We'll see. Will it be decentralized rideshare and decentralized ticketing and decentralized, lending? And I hope so, and I think so, but it hasn't happened yet. And so this second piece really is where we need to be on our feet. We need to be helping, both invest in those companies and create those companies and drive that, but be smart enough to realize, like, some will win, some won't. In some ways, there's great optionality in this space still because it hasn't happened.
It's super interesting. All right, before we wrap, it is a big week in New York. It was the Robinhood Gala was on Monday, but the Knicks and the Celtics are in the playoffs. The Knicks, my poor Celtics are down bad. But the Madison Square Garden area is on fire right now. But more importantly, after 1,300 days?
1,311 days, Galaxy is going to ring the bell on the Nasdaq, list as a public company. Just last night, we became U.S. domiciled for the first time in our history. 1203, we became a U.S. public company, and we're going to list on the Nasdaq. It's been a unbelievably difficult, journey. Mostly thanks to the Biden administration's kind of war on crypto. But we got through that. We got through 2018 where the market fell 96%, 2022. And so we're battle scarred. I was saying on the earnings call today, it's easy to think we're ringing the bell and we're at the end of you just crossed the finish line in the marathon. And it's actually the opposite. We're ringing the bell and you just crossed the starting line. If our first catchphrase was the herd is coming, that institutions are coming to crypto, I was like 7, 8, 9 years too early. The institutions are now in earnest coming for the first time. Like, they're getting engaged. Last year was the ETFs, and this year it's okay. Now we're going to get really engaged in crypto. That will be accelerated if we can get legislation, but it's going to happen even without it because you've got a regulatory framework in the SEC, CFTC, et cetera, that's making it more possible. And so it's wildly exciting. Once you're a public company in the U.S., you have access to the deepest, most liquid capital markets in the world, and they only exist here. And so we have been at a disadvantage for the last 5 years, and we're now at least going to be at advantage amongst versus many companies, and we'll at least be pari passu with the ones that are already public.
I can't believe it. You started the company at the end of 2017 and in early 2018 out of your family office. Have you thought about this day before? I mean, I know you're thinking about it now since you know it's finally here, but how big of a milestone? I mean, obviously it's huge. You pointed out the access to the markets and our competitor set and all of that, but I mean, give us some thoughts on like whether you thought you would be here, and have you thought about this? Have you rang the bell before? First of all, you have, haven't you?
I have actually. So Fortress went public. We were the first private equity hedge fund company ever to go public on the New York Stock Exchange in 2007, and it was just fun. We had set out to put these businesses together. I remember saying to Wes Edens and Pete Brigger, 1 + 1 + 1 is going to equal 10, guys. Let's just build world-class businesses, put them together, and there'll be synergies. And having that, and Wes had, and Pete had said the same thing, having that come to fruition, whatever, that was 5 years later, and ringing the bell and having a high net worth for at least a little bit of time, and all that excitement was literally one of the highlight days of my whole career. And so it's kind of even cooler to do it a second time in a new industry. But there's a lot of echo. We sat there and we said, we're going to build a company. I didn't have as much confidence when we started Galaxy that the crypto industry, where it would evolve. It was just, I thought it would get bigger and it was cool to be a company in Canada, but what it would take to have scale and earnings potential and presence in the, in the world, right? What was cool at the inauguration is at the vice president's ball, I looked around, there was 20 crypto CEOs. Like, we have a real industry now. And like I said, it's an industry that's got a couple winning products. It needs some more, but it's on its way. When we started the company, you were hoping that would happen. Where at Fortress, while we were doing something unique, you knew there was a good hedge fund business, a good private equity business, a good credit business. No one had just taken them public.
Right.
And so just running our businesses wasn't as complicated. It was difficult. It's hard to be a great investor, but there was a path well taken. Here, there's been no path well taken. And quite frankly, in 2018, you were like, is there any business left? Like, our revenue, our non-proprietary revenue in 2018, I think was less than $3 million. Like, there was just no customers.
Yeah, exactly.
And you look back and you're like, we could have sold it. We were going to merge, and all the near misses that could have happened, that didn't happen, that got you to here. And so you thank your lucky stars, and you listen, the Friday will be a fun day, and Monday we'll be back to work. But it will be a fun day.
Mike Novogratz, founder and CEO of Galaxy, thank you so much for coming back on Galaxy Brains.
Thank you, Alex.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Mike Novogratz, CEO and founder of Galaxy, and our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.